Hey traders, welcome to the stream. It is Monday. Whoops, sorry. What the? Oh my god, man. Sorry about that. Alright, so recovery day today, somewhat. Alright, where most of the index funds were up. I think it was almost every sector. What was it like of the 11 sectors in the S&P? I think like 9 were up. And we'll look at that. But here's Bitcoin that, you know, we were looking at some 4-hour hidden bearish divergence, and it just continued to rally a little bit more. I mean, you had like 2 candles preceding the stream yesterday that were up, and you've been sideways since. And that hidden bearish divergence argument is not dead, invalidated at all. This could continue. I mean, this could go all the way up to 28.8. But remember, you just put in a lower low than the previous low, and you've got lower highs than the previous highs. So it's like a short-term downtrend, at least for now. Short-term, very short-term. That could just be bullish consolidation, really. But still, you've kind of got now the hidden bearish divergence it wasn't here yesterday, but now it is. If Bitcoin pivots and stalls out anywhere below 28,250, you will get hidden bearish divergence. Now on both oscillators, not just one, but both. So, you know, it's cool that that happened. Really nice to see some follow through after that spring back test of spring on the weekend, but it hasn't really turned into anything significant yet, just up a few $100 more. All right. So yeah, that's about it on Bitcoin. We go to the daily. Daily's kind of like got a couple levels here, right? The horizontal line support you held, but here's this upsloping support that is maybe becoming resistance now, right? I had it painted and you were breaking through it, but you really haven't confirmed a close above it, and you haven't. I mean, you've only had intraday price action above that level for now. 43 minutes till the daily close.
It's time for Power Hour.
So nothing like crazy. Let's go to Ethereum. Still below the heart line. Almost hit that 1728.88 level perfectly before a little pivot. And I mean, my God, someone out there would be like, is that classic bullish divergence on Ethereum? It looks kind of similar to Bitcoin. I mean, I wonder. I really, really wonder if this is, you know, accurate from one low to the slightly lower low. I wonder, man. I mean, just like if you're above 1730, then you could go to 1972 easily. We knew like in between this level, it's normally 1730 or 1972, straight up, straight down. So I don't know if this is really valid yet. Maybe give it a couple more days to see. So that's it though. Still in the channel, still below the heart line, and if the sell-off continues, you at least have a target. Retest 1730, but maybe if things get bad, you got a $1,600 target. Just things haven't gotten bad yet. So, but this is what happens in illiquid market conditions, man. It's like the bulls have been in control of the market, you know, for, you know, a while now with the higher highs, higher lows. But then, like, you know, exhaustion and complacency and stagnation occurred with a failed attempt to break out of key level, and the sellers aren't really coming in yet. They just aren't. This is pretty trash performance from sellers after pretty significant development with the upthrust, backtest, upthrust. So that's good. It's not a bad thing. Win flush, right? Win massive, disgusting sell-off. It's not here yet, so good. But just, you know, liquidity's gone, man. Traders, I mean, there's just so fewer traders than there has been in the past. So you got to deal with that. And same thing with the stock market, man. My God, the index funds. I feel like I'm in a bad dream, like almost a nightmare. It's like Groundhog Day. Every day's the same. All right, here's BNB. Still above the 200 moving average. Still just can't make up its mind. The buyers, sellers are just stuck here. You're near the top of a range, 225, 350, and that's it. What's up, Big Boned Cat?
Big Bone Cat tip $25. It's been too long, sir. When you have a moment, please look at Astra Space, ASTR. An absolute loser stock that appears to have bottomed with a shark and Type 2 return. Daily RSI bouncing off of 40, and earnings sound good for the remainder of the year.
Yeah, we can look at ASTR. Thank you, man. Really appreciate that. And it's been too long. Welcome back, dude. Welcome back. As you know, lately you haven't missed too much. You got a rally at early January, and since then it's been garbage for crypto.
Hey Mitch, hope your day is going well. I saw your stream from yesterday late, and I hope you never have to stop streaming. You help give us all a way to reach success, a purpose, and the real ones stick around. The true community. Much love, brother.
Jacob G, Jacob Ree, thank you for the 618 and the kind words. You know, man, it's like this whole thing of streaming was like it wasn't even like when I started doing it, it wasn't even something one could like actually do, and it's a career and like it's your full-time thing, right? So it kind of like evolved over time with the free market dictating that it is. So I don't know when it'll stop, what people, you know, right? I mean, there's a war on volatility, that's for sure, right? So yeah, now it's in May, and there's like that saying, sell may go away, and that just makes it even worse, right? So I don't know, man. As long as people show up, I'm gonna show up. So thanks, dude. But yeah, you're the same price you were at April 3rd. Wow, it's May 15th. You see what I'm saying? It's awful. Same price you were at November of 2022 right now. Same price you were at August of 2022. Same price you were at May of 2022. Disgusting. Just awful price action. All right. Still not dead yet. You know, not dead yet, man. Let's go to XRP. I don't know why we go to XRP ever anymore. It's a joke. Doesn't move anymore. It's the same price it was at May of 2022, a year ago. Nothing's changed. 2 years ago, not really anything's changed. 3 years ago, nothing's changed. Wait, don't tell me we go. Yeah, 4 or 5 years ago, nothing's changed, same price. Yeah, you have the ups and downs, but this is exactly where the price was trading years ago every single year, right? Just what a joke. But yeah, still above the 200-day moving average. All right, put in another higher low, but who's going to buy it? Who's actually going to make this thing, you know, when are we going to get an impulse candle? Who's going to do it? Who's the one that's going to buy enough to make it happen? Good luck. Good luck, dude. All right, there are your big four. Let's look at total real quick. Total, right? Where, you know, the momentum shift after the really nice run the whole year, right? It topped out at a very real level of inflection and a neckline that was slanted. It was breached, and now it's formally being back tested as resistance when it was once support. That's pretty standard stuff. But, you know, it just all depends, man. Like, it is a confirmed head and shoulders slanted, but where's the follow through? Hasn't really come in yet. And the same stuff. Like, what happens if you really start pivoting here? Classic bullish divergence. It seems like it would make sense for more downside, yet a little bit more, but you know, just to see maybe a demand line here. I'm not calling the end of the run here. I'm just saying, like, wow, there could be just a marginal amount of downside still. That's it. Just dead market's going to be dead. And, you know, most things have recovered today. I'd be really concerned about some that didn't recover, though. Wow. Hey, Hex came back. So Hex is only up 5% today, and it's now currently below 3 cents, 2.99 cents. Wow. It's not the recovery we were looking for. Something I really like here of these cryptos is maybe Litecoin. What it's doing is amazing, right? An asset that broke a key support at $84. The buyers came in to rally the price back above it now. You're not just defending $84 ice line, they're also defending the 200-day simple moving average. And your positive momentum's only just begun to build today. So first level of positive momentum since April 19th. So just another high or low in the grand scheme of things since the bottom was put in last June on Litecoin. Really admire the price action and resounding effort of the buyers for now. Okay. Anything above $84 long enough, probably $105. Anything below $84 long enough, probably $66. Those are the levels. That's what we got right now. No formal edge or anything. If anything, it would just be bullish convergence maybe. But nice to be back above $84. Why? $84 is not a joke. It is right here. It's that February pre-COVID crash high before the collapse, right? So that's always good above that. All right. Wow, no one even told me it was like extremely loud. Why? Music, man, on the stream just can be a hindrance. Oh man, you just gotta wonder. I mean, a lot of these that have dumped, they're not completely dead yet, but I mean, like, for instance, we were looking at Dash, just how wrecked it was, and it's still wrecked, but this level here, $38, $39, I mean, this is a December 2019 low, then the COVID crash level. I mean, that's real, and you're here, buyers trying to defend it right now. Stop loss just marginally below that and let it ride. If you were going to play it, that's the way one would. You just don't know. I mean, it's always better to get a confirmation low anyway. But, I mean, hey, it's back in the basement. You're at a support. You're not resistance. You're at support. And on the daily, look at this hammer. Look at this freaking Japanese candlestick reversal pattern right there. That's beautiful. That's like pin bar, bullish pin bar. And it's caught follow through yesterday and more today, so that's valid. And you got to wonder what that will manifest into. How much more upside will there be off the Look, it's always about the Japanese candlestick reversal at the inflection point. Yes, Japanese candlestick reversals occur randomly in the middle of nowhere, and they can usher in reversals. But if you want the most powerful Japanese candlestick reversals, you want them always to be occurring at ice lines, inflection points that are significant, and they're from history. Okay, so nice on Dash. I'll give it that. After utterly falling to the same effing price it was at in November around Thanksgiving. Loser. But hey, nice candle, educational, right? Because this is universal stuff. It's like mathematics, man. You could identify this type of exact same Japanese candlestick reversal at an inflection point on gold, on Google, on Amazon, on Microsoft. In fact, I mean, like, that's exactly what was done on Amazon right here. Inflection point that is undeniable from history. You cannot argue with it. It is too factual looking left. You see them right there. And then it just happened, to sell off after breaking that level. But then that's where that piercing line reversal was presented and painted. And, since then it's been pretty good. So that's what you got to be paying attention to, all right? Keep beating that in your head. That's where you're looking for the candles. Hey, it's Mr. T Crypto. What's up? How you doing? You New Yorker? All right, so let's go to the S&P 500. Thanks for being here if you're watching. This is what I'm talking about. It's like nightmare. It's just like, how much longer is this going to last? Yeah, the shooting star on the S&P is still valid. It is. It just is. Until there's a daily candle close above that price, 41.67 valid Japanese candlestick reversal, kind of not, at anywhere significant as you would see. Like, it'd be cool to see that at 42.30 or something, right? The issue is where the Japanese candlestick reversal actually occurred was at the fake out level, right? Look where the, we know like 4,058 is very important on the, on this index fund, right? But, buyers pushed the price above that level temporarily, but it was short-lived in a massive reversal to way lower prices. And then, another like fake out above this 4177 level. And then you did it again in February. And here it is presenting itself at the exact same level as it was, as this level was created in June of last year. And so it's going, what gives, man? Is there gonna be resolution? It's mind numbing. It really is. So you're not off base for being like, okay, and I think like that's happening there, and then it's like this is one high, this is the second high, and there's 3-day bearish divergence. Like it's so undeniable, right? Like look how specimen this bearish divergence is on your index fund. You see it? One high, a slightly higher high, then the exact same high. I mean, that is weakness, stagnation, and complacency. And the oscillator is telling you that too. It's not just, oh, I have a feeling. It's like you're looking at it and it's happening. Not in the bullish control zone. And the 3-day 200 simple moving average, you're still clearly below that. Until you're not, I'm just telling you for now, the data that exists today are these things. And it's just like if this TA is respected, bearish divergence literally implies impending price action reversal. So if the TA is respected, what we're being told on this MACD histogram is reversal to the downside would be next if the TA is respected, but it hasn't happened and may never happen. These markets are zombie markets, at least the index funds. Okay, so just letting you know that it was like this on Friday too, and just no resolution. Who knows how long it'll take? It could take a long time, man. So just buckle up. Dow Jones, did anything change? Is our argument invalid? Nope, certainly not. My God, on the daily, you have hidden bearish divergence on the third peak. But even on the 3-day, you have very matured hidden bearish divergence on the MACD histogram at least. Where this high right here, you had this much positive momentum, nothing, right? And then on the 886 deepest retrace from this high to low, that rally occurred on this high that is slightly lower. I mean, this by this much, slightly lower than this high, and you have this on the oscillator. So the daily and 3-day are both implying continuation downward.
Devs didn't do something skeptical, but my pulse chain wrecked.
Richard Schuler, thank you so much, dude, for the 3s. Wow, man. I don't know. That's just another world. I'm not even... the excuse is, hey man, Hex is down 80% because they launched Pulse Chain, and so you should have been made whole or something. But it's still hard to buy, from someone who, ask anyone, right, that's participated in financial markets, traditional markets for a long time. What is going on there is nothing short of insane and weird and sketchy. Like no one would really need to do anything like that if it was truly unequivocally legitimate. I'm sorry, that's just, no one does that, man. It's not some special thing that, he just happened to fall upon and invented it and he's a genius. No, man, this type of behavior from an asset, from a developer, from one coin to the next, it's weird, it's sketchy, and you're not going to change my mind. You're not going to change anyone else's mind. So if you're indoctrinated into the cult, that's on you. That's unfortunate. There's maybe no saving you. Anyway, so hidden bearish divergence on the Dow Jones Industrial with a bearish engulfing candle that was confirmed May 1st. Hear me out. Japanese candlestick reversal at a key inflection point with a discernible edge on the oscillators. And now you're trading below the 200-day simple moving average, just barely, but you are. Right? I mean, the argument, like the variables stacking up for why you'd think the Dow Jones Industrial would go down next, not up. But of course, it hasn't happened yet, so it may never happen. All right. Look at this, the daily. Look at this daily, man. Are you kidding me? I want a refund, okay? I was told that this market would move, actually. NASDAQ, another day, another higher high. You have eclipsed 12,317, which was a major fake out area like the S&P had its own. You broke that today with a candle close, and that is officially the NASDAQ's highest daily candle close, and this NASDAQ composite highest close since August 25th of last year. So rejoice the NASDAQ being carried by mega cap tech, right? Nice, dude. Still doesn't mean you can't make a slightly higher high. The bearish divergence is still very real, and you might just be working on another leg of it, right? You go from divergence, triple divergence if you start stalling out at slightly higher prices. So it's really tough to, again, index funds are tough because you have all this divergence of different sectors. So if one's trading, it's always probably better. I mean, in my opinion, in this situation, individual assets, right? Like Amazon or Shopify, right? It's really tough because you just have, so many assets contained within these index funds that it'll make it really murky and choppy. Or, hey, some individual assets are going insane. Index funds not. Okay, hard to make money. Because there's definitely so much less liquidity involved in this market. So finite liquidity, finite capital. So you got to be able to see where it's going. And some are definitely catching the bids like Shake Shack today. Wow, man. Just gone, dude. Let's knock out the IWM. The buyers, again, defended the level by the grace of God. There it is. They did it, man. Up 1.22%. Talking about a battleground, man. This is like, I don't know. The Battle of freaking Hastings right here, dude. William the Conqueror, will he hold? Will he defend? All right, so just spring back test of spring, potential confirmation low, kind of like classic bullish divergence on the MACD histogram. So to go short here is not strategic in any way because it'd be like you going short at a support. So the only way to play this would be to long with a stop loss below 170, and that's it. Like, that's the only way to really play it. And now, if you start breaking down below 170, then yeah, it's a breakdown buy or a breakdown sell. But for now, you just have to look at it like it's a potential dragon with divergence, and maybe broke out or is trying to or whatever, or to do nothing, right? I mean, like one either goes long, they do nothing. Going short is it's like a lot more high risk because going short at support is the same thing as going long at a resistance. Would you really want to go take a fresh long on an asset that looks like this inverted? Nah, it's almost, and of course, if it fails, if the idea of the confirmation load, if it doesn't sustain and you start rolling over, like, in the coming days or whatever, you fall below 170, you take on minimal losses. And if you're falling below 170 again, chances are the whole market's imploding and you're going to be falling all the way down to 162, 160. So if one wants to take a chance, they can. These are the levels. But again, I don't really know how much follow through you're going to get, man, with such illiquid market conditions. And it's May, worst time. Okay, that's IWM for now, holding on. But once it falls below 170, I'll be the first one to say it's over. We're screwed. We're going way lower. We're going to make the lowest lows of the year or the entire downtrend. Probably going to take out the lows from June and September of last year. Just hasn't happened yet. So it might be one low and then the second low here. these two lows represent accumulation from the previous lows, right? Confirms it. So it's just not over yet. But I'll be here daily to monitor these markets to let you know if it is over, if we are breaking key supports. Okay, so those are the index funds, but then again, you had a pretty nice recovery
what is an
today.
Equity market capitalization exactly? Asking for a friend.
Equity market cap? I mean, I would imagine like an equity has a market cap, right? So that's like the shares outstanding, right? What is it? There's like the formula for it, right? So the price times the shares outstanding, right, gives you the market cap. But then you can have like price to sales price to sales formula is where you take the company's market cap, right? Again, the number of outstanding shares multiplied by the share price. And then you divide that by the company's total sales or revenue over the past year, 12 months. And the lower the price to sales ratio, the more attractive the investment, right? So if you have assets with insanely high price to sales ratios, you're probably paying premium. You're not paying, there's no like value. It's just overpriced. Okay, so I don't know if that helps. Did he mean that? Did he mean equity market cap? I mean, I know what market cap is and I know what an equity is, but equity market cap, I think that's what it is, right? Okay. Here's your entertainment, leisure sector. One that had been showing all this accumulation is broken out. It's above everything. It's above the 200-day moving average, it's above the ice line. It's above the supply line. It's hanging on here. You hold long enough, you start testing. I think that if you test 42.23 again, you're going to break out. And this is stuff like what the airline companies and the cruise line companies and the gambling stocks. Still don't know if Caleb was if that was helpful or not. So yeah, I mean, this was your top gainer today, but this isn't like part of the 11, right? We go to like the materials was like the top gainer of the 11, and it still looks so bearish, but hasn't really rolled over yet. I mean, my God, hidden bearish divergence on the lower high after completing, bearish cipher pattern. And just right there, dude, it's at the level. It's so close to like being doomed or not, right? Because if buyers get the price, I mean, they're above 78.67. If it catches acceleration with bids, then this thing could go to $89. But this is the level where like, hey, if there's not enough demand or too much supply on the material sector, this is where you could be seeing your fresh lows. You could be, of this drawdown, you could be going to $70. So definitely looks like something kind of changed, right? You're no longer go up. You're no longer making higher highs. You're actually now making lower highs, lower lows. So the trend is kind of transitioning, right? You're in the middle, potentially in the middle of a trend reversal. This is how it kind of goes. Where, yeah, you top out, you stall out with the same high, and then a pretty hardcore drawdown. That's like the first sign of weakness, and then attempted rallies that just fall miserably short of those previous highs, yet way less market participants involved than before, and then a lower low, and then a rally, and then that's when the W shapes start, forming and maturing, and then normally that's kind of what can usher in complete reversals of trends, those W's and M shapes. So it's there. XLK technology also just pretty much the top gainers. 0.02% less gains than the XLB materials. But here's that wedge still. I mean, just despite its sheer tenacity from buyers, from the highest high to the lowest low officially as of today. Wait, did you even do it? You didn't even do it. You were so close, man, to seeing a formal 618. Let's see if we can get this perfect right there. Not yet. 152.47. You were what, 27 cents off. Testing the golden retrace. You are once again above that August high. That was your highest daily candle close on the XLK. That's the technology sector since April 11th of last year. So 52-week highs. The upsloping price contraction continues. Very methodical here, right? Yep. XLF, big recovery, right? All the regional short squeezing again. Even the majors are going up, and it's up 0.82%. XLF, nothing's changed. It's terrible chart for now. I mean, I hope it holds, whatever, for the sake of, I would like regional banks not to all implode in on themselves and go bankrupt, because that means whenever that happens, we're all screwed. I mean, for the most part. Central bank digital currency gets ushered in. Yeah, we're in a lot of trouble when regional banks collapse. So it's like, okay, cool. If someone's shorting it, speculating, and they're making money, that's fine and all, but you better not be smiling while it's happening. You better be crying that you're making money, like the Woody Harrelson, he's got making the money and he's crying, wiping the tears from his eyes with the dollar bills, just because that regional banking is a form of decentralization from the Fed. Anything that is decentralized is amazing. That's like what our country was built off of, states' rights. And that's why, we're not some European country that, or Canada, where they just, with a broad stroke, this everywhere in Canada, it's like this now. Like, you can't do that in America because of the way that our founding fathers set it up, and it's beautiful. So I think like regional banks play into that. But again, the Federal Reserve had them buy all those bonds at these basement levels, and then they just started cranking up interest rates, and then all their bonds started becoming worthless. And then the bank run started, and which are maybe not over. And so they'll have to sell those before maturity, and because they don't have the cash for it. It's a bad problem. All these unrealized losses are still there, whether it's today, yesterday, the day before. They're all there still. So it's just price is just going sideways. All right. Why no more free coffee at your bank? Well, times are tough, man. I guess they can't afford that. No, Wells Fargo is certainly not a regional bank.
Hey Mitch. If I were to DCA some of my IRA to BTC over the next 6 to 9 months, I was wondering which day of the week generally is best to DCA deploy into. Mon? Fry? I know this is not financial advice, Ty.
Yeah, it's certainly not financial advice. I don't give that ever. Never have, never will, right? Is there a best day? Are you talking about buying GBTC? Oh, wait, you're talking about taking your money out of your IRA? Seems like sacrilege, man. I'm kind of confused, right? Because if you're taking your money out of your IRA, you're going to get penalized like, what, 10% or something to take it out of the IRA and put it in something else. And IRA is incredible, man. It's the only vehicle we have to have tax-deferred gains, right? Every other account that exists, you have to pay capital gains tax on your gains. In the IRA, if it's a Roth, right? If it's traditional, it's different. If it's a Roth, though, you should never be like taking your money out of your IRA. You're gimping yourself there. Did he say which one it was? Traditional or Roth? Anthony, which one is it? But still, even still, man, you got the penalty. Alto IRA? I mean, that's like a company, right? Yeah, so Alto IRA, crypto IRA. So you're able to do it with in-house, it looks like. So it's traditional, I guess. And I guess you can, if you're able to transfer it any time. I mean, there's no date. Like, maybe a red day where Bitcoin's down, not up. That's all I could tell you. The day of the week, I don't think it's really that relevant. But it seems like he's able to do that without any penalties and stuff based on what I'm looking at. So if you want to do that, yeah, one can. Just, I don't think it matters. Red days, it's always like a thing, right? Even if something's on a daily and there's a trade set up on it, and it's like one could wait, for a sell-off. Because you're trading the daily candles and stuff, it's like one just waits where Bitcoin's down or a stock's down on a red day, and it's at near session lows or something. It's down 2.5%, but it's like Shopify. It was a perfect example of that. Good God, man! I remember like one day it was just like down, like really, yeah, like one of these candles here. Shopify up 0.41% today. Already hit that first target. I think that's a break. That could very well be a breakaway gap, meaning like any sell-off you get will never fill the gap. It would do something like this and fail to fill and then continue higher later. So keep stair-stepping. Okay, so let's go to golds. Speaking of gold, I got my coins from Zeke today. Again, there is an undeniable edge, right? Okay, so the chart on the daily is implying that Bitcoin, if it's respected, Bitcoin would like go down next. All right, just because it's the combination of, right, the W structure has completed. Here's your 886, and from one high to a slightly higher high, you do have lower levels, like significantly lower levels of positive momentum than that first high, right? And so that would imply a reversal, but it hasn't happened yet and may never happen. I'm just telling you, if you're not gonna short it, best move might be to do nothing, right? To long into the face of a completed W shape with bearish divergence is really dumb. I mean, it's like financial Darwinism. Even if it kept going higher, you keep doing that. You if you were to buy now and then it goes up this time, well, that's really bad, because then all of a sudden you're gonna think like, hey, if I just do the opposite of what the chart's implying, I'm having it's good for me. I'm telling you though, when these type of variables are presented together in combination and you're trying to play the numbers game, you're gonna have a bad time. You're gonna lose a lot more than you win. So that's the problem with gold. Someone even asked me today, should I buy gold and silver now? And it's like, how can I tell somebody it's a good idea to be buying gold and silver right now while looking at that, right?
BSM, please and thanks. Shiny rocks, boo, boo, boo.
Shiny rocks, yeah, that's right, Gabriel. Thank you, dude. BSM, all right, we'll look at it. Appreciate it. It's a half joint.
Is that?
It was that. Is that? That's as far as we went with that. Thank you, Caleb. Right? So forgive me for just pointing out what exists in current time. Even the RSI does imply on a slightly, every time you make higher highs, you're just making lower levels in the oscillators. My God, I hope, because it's so fundamentally insane with like all the central banks and governments buying gold at record levels, I hope it just invalidates and we just moon and we're at 3K in 5 weeks. But again, man, like if you could just blank out where it says XAU USD, it doesn't matter what it is. If it's showing these variables, it's the worst time to buy. Short term. Long term, monthly, mother of God, man. I think one buys today. You're probably going to deal with some downside short term, but eventually, months later, many months later, even a year later, you'll recover and you'll rally and you'll be at all-time highs. And I think that's where gold's going. I think gold's going to break all-time highs for real, not this Rudy Poo. Oh, we're just barely doing it, only on one exchange, but not this one, but that one. This is kind of a joke right now in terms of saying, oh, at all-time highs? Not yet. So that's where I'm at on it. Technically, I can't give a green light on saying it's a good time to buy short term, but monthly says no worries, man. What are you worried about? You got all this upside. Eventually could take 6 months, man. So there's silver. I think this is like very possible for gold next. I mean, gold doing similar little drawdown like that, not a big deal. Only people getting wrecked are people like literally buying at the resistance. Remember when you're at a resistance and an asset like tests it again. It can't break it yet. I mean, isn't that like crazy? Like that's like I was talking about the IWM, like an asset that's hitting a support and then it's like holding the support for the second time. And it's like, even if its rally is short-lived and it's a loser, lower high than previous high and eventually rolls over and breaks the support, it's just either someone's longing at support on the confirmation low of the bullish divergence, or they're doing nothing. I mean, to go short, again, it's just, it's not what you're supposed to do. One's always supposed to buy low, sell high. So silver sold high, right? Clearly, market participants sold high, and you've fallen below 24.84. And I mean, a back test of $23 would be awesome. It's such a key level from history. 2006, what was it? No, it was back in 2013. Yeah, the big one's $26, man. Like, it's everything, and that's where we failed to breach. So now looking left, at $23 is the big one. Look here, right? You see, it was even a pivot point. You can't even believe it. 2010, for the first time ever, it was a support. So that could be a good spot to maybe DCA on silver, right? 23, 22.91. Sorry, let's see. And then platinum. Man, platinum. Talk about Monk S here. I mean, like, you have broken out, right? You broke not just an ice line from 2006. You also broke a supply line. You'd been confined in a downtrend since February 2021. You broke it. Look, you see it. And then the formal bullish back test of not just that 2006 ice line, also the supply line became a demand line, Cinco de Mayo. A rally ensued off of that, but it just really went nowhere. But you're just right back down at this level.
$30. It's the Macho Man V.
Oh God, Caleb. Sure, I guess. What did Macho Man Randy Savage of YFI? Well, unfortunately, below 74.50, death, pain. All you will find on the gas giant of Bespin or whatever, right? What Yoda said to Luke before he went. That. So, but we'll do that. Thank you. So you tell me, right? Momentum shifted. You've broken out. You're still broken out. You're just sitting at the level that was always resistance is now support, and that's about it. So I think there's like news breaking about like massive deficits of platinum, so that could catalyze the rally. You know, show me the charts. I'll show you the news. Well, the breakout and the back test technically. Okay, well then news is starting to come in. What was it? I'm not kidding. Just type in platinum news. There it is. Yeah, platinum 2 hours ago. Wall Street Journal. Platinum market seen near million an ounce deficit amid supply shortage. So if we got like fundamental shortages on the markets, that could very well translate into this breakout backtest being solid for an entry with a stop loss somewhere marginally below 1,020, 1,025. Let it ride and let's see what happens. It's actually a metal that is unlike silver and gold right now. Silver and gold, they had their show, right? They had their spotlight. They had their runs. They're way up there. But platinum is one that has been very quietly reversing, right? The momentum shifted. And again, look at this monthly that is just spectacular. Right, this is everything. 1,050, man. 2006. And what's happening this month? Well, you breakout, a confirmed breakout with candle close last month in April. And then this month, all that's happening is a bullish back test. What was once a resistance support is now support. 15 days, 22 hours till this is, confirmed. It may fail, but I'm just telling you what's happening right now in platinum, which is pretty good. I would, if it was up to me technically, if I had to choose between gold, silver, and platinum technicals, it'd be platinum. It has the most value. Has its upside is not limited with a W shape, right? Like gold. Anyway, all right, that's platinum for you. Okay. Let's take a look at U.S. oil. That was pretty flat, right? I sold off. Okay, so this is never the monthly. Let's go to the daily here. Yeah, remember the kind of double bottom here, but no follow through at all. It's hard to try. A bullish pin bar, very real bullish pin bar. All right, no one's going to argue with that. But the bullish pin bar did not really happen at a strategic inflection point. Nope. It just happened to be where the March 20th low got put in the first one. So it could be a confirmation low. But remember, you are downtrending. And just because you make a potential double bottom does not reverse the prevailing trend. The prevailing trend, lower highs, lower lows for a very long time, ever since what? The entire trend reversed with a bearish W, right? The bearish shark pattern. Unfortunately, it did not give you a type 2. It was just a type 1 and it was gone. So the trend is still bearish until further notice, until you're actually making consecutive higher highs, higher lows, breaking ice lines from history. You are a loser. Bear. Sorry. Rip Bobo. Look at the rejection of the 200 moving average as resistance. Loser. Bearish. Bearish until at least $83 is recaptured for real, not Rudy Poo joke. Like that's what happened with the gap up. It was a joke. Just rivaled all these other local highs and just rolled over again. Stupid. Nope. Can't be bullish on USO right now. Nope. Even though this could turn into something far more significant, right? Oh, look on the 8s. Time flies. Wow. It's logo on the 8s, but it's also... Okay. The daily candle close on Bitcoin. Let's go back to it, man. What kind of daily did we paint, man? Up in the chat, amen. All right. You tell me, right, what happened. So buyers defended the horizontal line, support locally, right? But this demand line here, right, has been formally back tested as resistance now. Today was the day, not yesterday, not the day before, the day before. The day before was the formal breakdown with candle close. Today was or yesterday now was the back test. So that's not really great. Now, that's kind of not what you're looking for if you want insanely higher prices right now. Because, right, you had the back test and the 4-hour is still giving us hidden bearish divergence. 4-hour just gave us a bearish engulfing candle. And unfortunately now the 4-hour RSI is showing hidden bearish divergence. So even more of a shorter term argument for downside, for continuation down. I hope not though, man. Again, I want Bitcoin at $1 million every day, forever, okay? Good. Sorry. Daily 4-hour. The stuff, it's starting to stack up against Bitcoin a little bit. 3-day classic bearish divergence, right? Yeah. I mean, there's just not many variables that are screaming good short term, very short term. Kind of all saying maybe a little bit more down. Right. I mean, there it is. There's that back test on the 3-day. We have a 3-day candle close too. So double Jesus chimes. Here's another Jesus chime for the 3-day closing. There it is, a short one. All right. So it was looking at it, so we looked at it. Also, real quick, big shout out to Jack and Cryptos, thank you so much for the 4 months of support, man. The Mean, thank you for the 4 months of support. Lechifre, thank you so much for the 3 months of support in the Citadel. And the Razorback, thank you so much for the 4 months. All renewing today for another month. And y'all are the ones that keep it rolling, man. So I'm very grateful for y'all. I mean, these smart conditions, it's really humbling. Because it's like, you know, everyone and their mom can or would support during the FOMO mania market. Sure, we saw that. But man, to be supporting the TA and this world and these market conditions, MVPs, all of you. All right, Ethereum. You know, maybe divergence, but you got conflicting variables. In fact, man, I don't like this at all. Yikes. Okay, so there's this old 1846 high from March 18th I have had plotted here. And, you know, the old dragon that played out, certainly played out, just underperformed, which is not really a good sign, right? You don't want a pattern to play out and then just kind of crap out. Let's see, it hit the high to low. Hit the 618, right? So first target of the dragon was achieved, like a traditional target, right? You're always on a dragon, 618, 786s, 1272. Those are the three for the Fibonacci targets. So it hit one, but that was it. And so now you're making a lower low than the previous lows. And now a formal bearish backtest of 1846. It was once resistance a multitude of times. It is now resistance again. And after doing that, you have a bearish engulfing candle that was confirmed, and you also have that hidden bearish divergence. It's continuing its development, right? So really tough to be like, oh, I'm so excited about crypto right now, when just now with the new data and this little rally, it's kind of giving you more reason to not be that impressed, where there could be a little more downside. Sorry. Oh, wow. Yeah, nice, Jacob G. The Domino's Pizza wedge looks beautiful right there, and it's at an ice line. It's really intriguing chart. I showed this in the general chat today, just screwing around. Sometimes I'll just post a random chart while I'm scanning in the Citadel. I'm spamming like a lot of charts. I'll just throw one out there in general. And this you got to tell me what you think. I get the wedge. This was what he plotted, and I like it a lot. It's a beautiful type of structure. But the issue is really, the major issue is the really aggressive distribution going on. As you can see, this 200 moving average, and you can see the price action correlating into it, just massive rejections. Okay, that's the context of the chart. Where it's at is actually extremely, potentially lowest risk area you could ever dream of for a long, where this level from 2018 and 2019 is being defended, and it's not just you're springing, you're like back testing the spring. So it's like, again, spring back test of springs at the ice line. This is legit like the lowest risk entry for a long ever. It just is, right? You're buying low. That's buying low, buying at a strategic level. Now we'd be waiting for a really nice Japanese candlestick reversal. That hasn't appeared yet here, but that's the issue, right? So you're at the strategic entry, the best one, but man, the context really makes you be like, people are aggressively dumping their Domino's Pizza shares. You can tell, you can see how bad it is. And this is very similar type price action to what we saw before PayPal. It was so aggressive, the selling. Hold on, let me generate. This was very, very aggressive. Only lower highs, right? 200 moving average, only below, only staying below, and then just collapse on the earnings. So you got to wonder, you know, that's why it's intriguing, because I think there's an argument on both sides for the buyers and the sellers, right? But yeah, someone could like have to take an entry and then have a stop loss set up. And if the stop loss gets triggered marginally below that ice line, well, some seriously bad things are happening that could take it, you know, way lower, 10, 15, 20% lower easily. So something to think about. Sometimes it's like that, man. But man, look at like Shake Shack here, dude. It was killing it. It was great. Continues to roll. Like this harmonic was identified a very long time ago. I mean, like a year ago or almost a year ago. And then you get that type 2 return and then the rally back above the 200 and then just sideways, like bullish consolidation and just on earnings, of course. On earnings, you've gapped up. You're running highest daily candle close since late March of last year and just butting up against the very real resistance from 2018. So, but this is the way it goes. And sometimes it takes a really long time to play out, but it was beautiful. It was there. It was specimen. It's what dreams were made of. All right. I do need, let's just look at, I think we had a request or two. Yeah. Knock it out real quick. We'll see. Oh, Astra, ASTR. Astra Space. Oh God. Should be called Astra Underground, right? Because it's the inverse of space. If we flip the chart over, it would be a far more relevant name, right? Or appropriate name. All it does is win, right? With this, but flip it, and when it's reality, it's up 6% today. Aerospace and defense, right? I got a bad news situation. The technicals are awful, and guess what? They never make money, ever. They just don't make money. In these market conditions, terrible time to be owning assets that don't make money. They like, hey, quarterly, they come out and they just lose money. So all that can happen is analysts estimate that they will only lose a certain amount of money. Sometimes they can lose more money, sometimes they lose less money, but they don't turn a profit. And so you can see how market participants reward assets that don't make money at all. They collapse like a dying star. They collapse in on themselves. And this one just hit like all-time lows in April. It's a loser, man. It's something one should never touch. I'm just saying. You got a couple levels here. Break 40 cents. You could go to 64 cents straight up, straight down. But until then, hands off. ASTR above 41 cents might have some upside. But again, you know what it would turn into if it ever got any upside. It's only going to make a lower high than previous high. 100% chance that happens based on history because that's all it ever does. Until something changes, you got to go by historical performance. It's garbage, dude. So thank you. You were right, though, about it being bad. Earnings sound good for the remainder of the year. Yeah, earnings as in they never make money, right? They just don't ever make money. Just it can't be good, man. If just an earnings report and they earn negative amounts. It's an oxymoron, right? Okay. DSM for Gabriel. Blackstone Minerals. Well, I'll scale out here. I have no memory of this place. This is the chart. Well, you can immediately see $20, 1950 is that major level from history, right? Seems like we got some price action back from 2015. It's been support. It was then resistance in 2019 before crashing. And then it was formally back tested as support in July of last year. And just recently, same type of test. Okay. Well, the issue now is, as you can see, an asset that's in an uptrend very seldom will fall below 200-day moving average and then reject it. Like this is very uncharacteristic of what's been going on since the COVID crash recovery, right? Number go up, higher highs, higher lows, always. But
Hey
then,
brother, could we please look at Square? Thank you. Clinking beer mugs.
yeah, J-Togs, thanks, man. We'll look. So you already got the problems with the moving average. You tested the all-time high and then rejected it violently. But you're not making lower lows yet, right? That was a slightly higher low than the previous low. So the trend hasn't truly reversed yet. Not yet. You've only made one lower high than the highest high, really. So you might be in the midst of transitioning, right? Reversing your trend overall. I'd like to see some sort of like confirmation high, back at $17 or something. But this is not really good looking to like, hey, you tested it again after a buying climax and this was it. You went to $17 and then you started rolling over, rejecting the 200. I'm sure there's probably a nice channel here too, like a demand line or something. Look at that. That's beautiful. A beautiful demand line.
Do VPLS.
What's up? Not a real name. Sure. Thanks for the first super chat ever, man. Yeah, someone already asked for Wi-Fi. We'll do it. Thank you. But he asked me, he actually requested for me to do it in the Macho Man Randy Savage voice. So, gonna have to do that. But you can see oversold in the uptrends around 1427. Breaking that demand line would be really danging too, right? But the main level of all levels is 1337. Because if you don't hold that, you go down 1085. You're losing 30%, right, of your value pretty fast. And then after that, there's just not really much support at all until 433. So, yeah, I get it. Someone will be like, head and shoulders, maybe. Like, right, the trend has not reversed yet. But yeah, I can see a high, then the highest high. Now maybe a lower high that matches in price the left high, right? So left shoulder, head, and then maybe right shoulder here. Someone could identify it and interpret it like that, but let's see. We need some more data. Let's see some more weakness. Got to see a lot more weakness. It does look like you have hidden bearish divergence on this lower high too. Yikes. So it seems like things are shifting on this asset, right? Blackstone Minerals a little bit, not in a good way, but it's not completely over yet because you have not made a lower low yet, and you've only made one lower high. So that is not enough evidence to say that the trend has truly reversed to the downside yet, okay? What's up, Jay? Thanks for the threes, dude. Kings. All right. So Wi-Fi, which is, yeah, you were warned about this one. It was testing that level. It's like, man, below that, you better be any profits one made in January, February. Protect them. Protect those gains. So broke 74.50 and ran straight down to this low from January, mid-January. And, I guess as long as it makes a higher low than 53.84, you're fine. But what happens when it pulls a Shiba and completes an 886? Like from this low to high, 88% retrace, which is way back down to like 5,500, below the 200-day moving average. I was supposed to do it in Macho Man Randy Savage. Well, you're not going to rise to the cream of the crop when you're below 74.50, man. Below 200-day moving average, garbage. Oh, it's tough, man. It's Monday, all right? Yeah, I don't know, man. I think you're in a lot of trouble here at Wi-Fi. But if you get back above 74.50, we're back in business, man. But if you get back above 74.50 and you just end up making a lower high than the April 14th high, then all of a sudden consecutive lower highs, classic distribution, that's not good either. I think something's fundamentally changed in all of crypto in the past few months based on what the SEC is doing to crypto exchanges. There's a trend going on, and crypto exchanges in the U.S. are exiting. They're leaving. They're going bankrupt. They're filing for bankruptcy. And the more that this trend continues, the less liquidity there will be involved in crypto exchanges. So therefore, it will be much more difficult for these assets to do anything. The volatility goes away, liquidity goes away, price action goes away, and clearly just all of a sudden, distribution starts coming around again with lower highs, and the highest high, the buying climax, virtually hitting that first target, couldn't. Then they attempted to rally once, then twice, and it's like, gosh dang it, confirmation of distribution. Now you're making a lower low than this low here, and you're just trying to hang on to this one inflection point. It's, pretty bad. It's like this for most altcoins. Okay, so there you go, Caleb. Thanks, man. And thanks, not a real name. Boom, you got your Wi-Fi request. And so let's go to Square, which is at the lowest risk area ever for a long, if one wanted to. This is it, man. It's either here or death. Now or death. It was up 2.36% today. Pretty bad for a recovery day for the entire effing stock market. Weekly, he says. Yeah, we'll look at it, but let's look at the daily too. So here we are. 55.82 to 58.30 is an undeniable major level of inflection. I mean, you're below the March 2018 high, but you're above the low, right? I mean, from 2019 and 18. Okay, and here's the low from June of last year. You're just at it. You took out the low from freaking March. And so you understand like why it could be the lowest risk, easiest area to long ever with the tightest stop you could ever dream of, to where when if this trade fails and buyers do not come in to defend this level for a massive markup, well, you get stopped out and you barely lose a freaking dime. You barely lose anything. And that's the whole point of like trying to buy low. It's at the scariest point. It's staring into the Mariana Trench, the abyss, man, because below this level, it could suffer the same fate as PayPal, which is collapse, capitulate. And PayPal's about halfway through its major levels, right? PayPal has its own, just like Square has its own, like low liquidity area, straight up, straight down. So I'll tell you that, like that's where you are. What kind of, oh my God, here. This is it. Okay, the education being instilled earlier about Japanese candlestick reversal patterns at key inflection points. Please tell me what's going on Square. Can you see it, chat? Please let me know if you can see it. I might need to get thicker glasses, man. Wow. Now you need follow through tomorrow. You really do need follow through tomorrow, but my God, this is exactly what Amazon was doing. Yeah, we got a piercing line, Japanese candlestick reversal, one low, then the second low. This is the smaller wave structure, right? So you think about dragon stuff, it's like X, A, B, and then here's C completing with the piercing line at the inflection point from history. You know it, you looked at it. Let's see what kind of follow through we get. That's why I'm saying it's the lowest risk area ever. But dang, man, to have that reversal candle, that's like the signal, right? Japanese candlestick reversals are signals when they're identified properly. Proper identification is when you're looking at them at strategic entry points. So again, below, you got to get back above 58.30, and we got to get some follow through tomorrow. Some sort of higher close than or the same close as today's close. But dang, really intriguing chart on the daily. See what I'm saying? Like weekly, but dang, the daily's telling us something, man. Yeah, I mean, my God, you barely lose anything at where it is right now if it gets stopped out. You would not want to own this asset below 55.82. You just wouldn't. The argument becomes strong to not own it. Wow. Okay, we'll go to the weekly too. Oh, the weekly is something else, man. I'll tell you, because, we go with candle closes and wicks. The weekly candle close on Square from March 2018, there it was. You can see the price action correlate to it later in history, November 2018. Look, September 2019. And here we are again at the same level. So there's nothing really going on the weekly for us besides the test yet. But this could also, if there's follow through on this piercing line on the daily, it could turn into a piercing line reversal on the weekly. So there is an argument, the things to do on Square, one either longs it with a tight stop, or they do nothing. to go short at this area is very dumb. Like, and you might luck out and it collapses tomorrow in the coming days and it breaks and it draws down to $34. But again, going short at support is the equivalent of buying at resistance. It's stupid. And long term, you will always lose. You will lose. What's up, Exhibit?
Dollar Shib Weekly.
Yeah, look at Shiba. Thank you, dude. So that's trade setup worthy of sorts, man. I mean, so here's the thing about it being so at such a strategic level, right? It's so close that you could get stopped out tomorrow morning. I mean, or like, you can't long it now. Tomorrow morning, it might just open below the key inflection point, right? But, and it could get stopped out in the coming days, and that's fine, right? But it's just so simple here. Right, entry at where it's at now, and then just the tightest stop with minimal losses. Just, my God, somewhere below the low from June, right? That's, shoot, man. You get away with so much. You could take profit at such a lower level because it's such a tight stop. It's such a strategic entry. There's our supply line here. Yeah, by the looks of it. Yeah, like where would we have a first target for 3-to-1? $69, because 69, it's like a couple peaks locally. Get 5.76 to 1 reward to risk. That means one could have a stop like looser, get away with a looser stop, like get a 54.25 or something like that. I know people will be like, what if it goes down here? This is not the support. This is the price action correlating to the historical levels. So, yeah, I mean, something like this. Super tight, and the gap fill could be another target. And then third, which should be maybe the top of the entire trading range, or maybe a historical level, right? Let's see. Yeah, that's a major, look at that. 2018, 19, a couple times. Major resistance right there. That'd be your exit. You'd just be exiting the trade if it played out. So something like that, man. I know, man. Like you want some more follow through, sure, but dang, it could be. Here's your first low, and there's your second low. And yes, someone said, "Hey, nice bullish bat there too. Let's plot it. Let us plot this bat." My God, the variables keep appearing, don't they? Here was the 886 initially. And here it is again. So you could be getting a type 2 bullish bat at a key inflection point with a Japanese candlestick reversal. Not bad, man. Not bad at all. You're at it, dude. You're literally piercing lining at the 88% retrace. That's crazy good. All right. That's value, man. That's value. I try to provide it when I'm live for you. I really do. And hopefully that helped. I know you have a finite amount of time. You got kids, you got a wife, you got work, you got your job, you got school. And I try to give you some good stuff while you're here. All right. But again, if tomorrow there's no confirmation, I probably shouldn't even post this trade setup yet, because if tomorrow, what if we just start drawing down on a nasty day tomorrow? Things are collapsing again, contagion. Then it was never a true piercing line. It is just now a potential piercing line. You got to get the fall through tomorrow. So I don't know if that's going to happen. Okay, just put a little hazard in there. All right. Let's deep thoughts and prayers for Square. This is it, man. Pray the overlords of the market have seen what we've seen. Their mouths are watering, and it might be time to rise. Because look, think about like dumb market would be like, okay, I'm not using any traditional technical analysis. I'm just gonna, well, PayPal just got destroyed, so that means that Square will certainly get destroyed, right? It'll follow the exact same outcome. But on its earnings, it survived. Its earnings survived, and they weren't so bad that you had like a breakdown, like a breakaway gap to the downside, and you've broken support. There's something much more intriguing about this chart than PayPal. Okay, no earnings to worry about. Let's just get some fall through tomorrow, and it could be an incredible long entry. I don't know how well it'll perform. This is at the area. Hopefully it plays out in the coming days, weeks, months, and I'll be able to do a YouTube short clip on this exact analysis, right? So people can see the magic of TA. All right. Let's go to Shiba Inu for exhibit. All right, Shiba, this is what I'm talking about. Like why if it could have the same outcome as Shiba. Well, you're at that 886. You're definitely maybe showing some bullish evidence in the MACD histogram. 885 is an inflection point where last time when you broke it, it was a straight shot up to the next major levels, 1300. But here you are. Here, he wants the weekly though. Weekly not really giving me anything. I don't really see anything that's that special about the weekly. Negative moment building. You're just now barely in the bearish control zone, right around at 40, 39. I don't see anything besides a lower high in the previous high. You confirm the bottom, but then the rally was distribution from the previous high, and now you're rolling over, and now you're coming back to rival the same lows. It's not really great. Again, I think something fundamentally has changed in the entire crypto market because they've literally waged war on exchanges. You haven't noticed. They're leaving. They're going bankrupt. They're cracking down on exchanges. That's just fundamentally killing the crypto altcoin market. That's just happening. So daily, a little more intriguing than the weekly, just because formal 88% retrace. See what kind of price action we get. It's terrible so far. So bad, man. But good luck, Shiba. All right. Well, I've been live for an hour and 30 minutes, so thanks for coming out. I really appreciate the likes, love, support, contributions, the really kind words today. Some of y'all said, remember your positive feedback is really an engagement, right? The amount of stuff you write in the chat. I mean, it really helps with my confidence and and it affirms what I'm doing, right? Positive feedback. All this stuff, right? That'll keep me coming back, and So thanks for all that. I appreciate it. Just let you know, it does not go unnoticed. So I'll be back though. Pray for Bitcoin. I don't really like the 4 hour. Even after this little rally here, it's only made the 4 hour argument worse. Right? Ethereum too, back testing that resistance as resistance, and then bearish engulfing. So, but hey, man, it's dude. Stock market's closed. This stuff's gonna do all kinds of crazy things. But yeah, here it is. Here's your undeniable bearish edge that is developed. It hasn't really completely started playing out, right? Because you got to lose some more positive momentum, get close to neutral. But for now, you're up there. And it's implied that there's a little bit of buyer exhaustion on the 4 hour. All right. So Charizard wants Pepe. Well,
Pepe.
We can look at Pepe. Sure, dude. Oh, Pepe, Momo shift. We got an inverse head and shoulders on our hands. Oh my God, dude. Imagine if we do. Got a couple levels here. Inverted hammer, May 15th, which is I'm looking at the 4 hour, my bad. Yeah, so you had an inverted hammer reversal, adding somewhat of an inflection point. There's not many, right? But May 1st, there it was, that peak. It's being defended and back tested, and now you're rallying. You're up 4.29% on the new day, and just imagine, I don't know if this would play out at all, man. I have no clue, but I'm just painting it's fun, right? It's kind of like, oh, we can all see it. I wonder if the degens can see it too. Is this real life? Not yet. It's not real life until this level's broken, which is like what? 20 thousandths of a penny or something like that, 200 thousandths of I don't even know. It's so worthless. I don't even know. But that's the breakout point. Breaking that's where you'd be getting a major markup to at least 283.0766. So it's a pivot. It's going on. I don't know, man. Like it's right. You see it. It could easily fail. It could so easily fail, but I'm just showing you for now. And it's easy to strategize because no one would want to own Pepe below 1663909. That's the cutoff because look left. But if someone has to stop somewhere marginally below that and they're in it, go with God. Let it ride. Let's see if we can get to the next resistance. If we break it, then all of a sudden the Pepe gains are back on for this, crazy attempted rally that you'll probably never take out these highs from May 5th, but you could at least make up high to low 618. A 50% retrace happens to be perfect right there at that candle high close. So that'd be probably a target if you ever broke 207.6530. All right, there's your Pepe. We got potential for head and shoulders on Pepe, man. It would be maybe the first time in history that Pepe would be able to respect the TA because there's never been really a structural development that's existed. I don't know. I think it goes back further, but it's been like, April, it was doing the same thing for like a year plus 2 years. Garbage.
Can we see CHWY stock?
Sure. Pray for the Pepe, man. I hope it holds 1663909. If it does, could be Kangs. Kangs again. What's up, Todd? Thank you, man. Yeah. We'll look at Chewy right now. They're like a shipping company. Well, it had the full-on bubble pop, a good old 2000 tech bubble chart. Goes down, hits a 100% retrace, and has a really nice rally off of it. Then you started stalling out up here. Yeah, $52 target level. Yep. And so from there, there was a demand line. You broke the demand line. So you're below the 200-day moving average too. Looks like you're trying to hold on to this one little level right here. A high from July 2019, August, and September 2019. Oh my God, it's actually what was once resistance back then. You see it, right? I'm not kidding. You see the price action, and then you go forward and you see that it has just now been formally back tested as resistance again. Oh man, and now there's like, there's an edge, but there's a bearish engulfing candle on last week, and it's all about 35.39 now, right? That's the big level. You can see what happens above it. A lot of straight up, straight down. So, so far on the drawdown, you have broken support resistance, and now you're back testing the resistance as resistance. If you break above 35.39, though, break back above it, then that would invalidate this bearish back test we're witnessing right now. You can see it. There it is. Price action, what it's done after failing there. It's not been good, but you're doing it again. You broke that level, and now you're back testing it. And that's all you got for now. And I mean, RSI, hidden bearish divergence potentially too. Not really great, Todd. But yeah, may the Pepes be with you. I'm at here, everyone. I'm annoy people with the ping and Citadel for the Pepes. All right. All right. Well, y'all kept me around a little longer. I appreciate those contributions. Good stream. Definitely a good stream. Some decent education involved in real time, right? I mean, like real life education on the charts that could be actionable for somebody. So someone could like make money and also they're learning or reinforcing what they've already learned, which is important, right? Retention. So again, remember the consensus is kind of similar to yesterday. That hidden bearish divergence is developed. There's just a bearish engulfing candle in the last 4 hour, and you might be coming to test 26,682 again. Not feeling too hot about Bitcoin right now, as you can look at just total, right? I mean, we didn't even ask Jonathan what he thought about the totals. Jonathan, what do you think?
I like turtles.
Yeah, of course. He likes totals, chat. There it is, right? The neckline of the slanted head and shoulders has just been regarded as resistance formally yesterday. And that's it so far. So a little bit more downside. Not saying end of the world. Maybe $1 trillion, $1.015 trillion.
Watch the stream daily to make sure you understand the alpha dropped here.
Thank you, Andrew, too. I really appreciate that, man. Who's the alpha, man? Hey, alpha. Who's the alpha, dude? All right, so pray for Pepe, pray for Bitcoin, pray for the financial markets, pray for the banks. So I'll be back. Until next time, respect the TA.